And let's say good morning to First Ontario's Dave Skirman for another segment of Finance Friday. Good morning, Dave.
Good morning, Bob. How you doing?
Good to see you on the 1st of the month, as Brian calls it. So let's talk about we're talking about the basics of mutual funds, but also stocks as well. Actually, for directly buying stocks, let's start there.
Okay. Well, if you buy stocks on the stock market, you're buying a share in a company or a number of companies. If you buy shares in more than one company to diversify your portfolio, which any expert will tell you should diversify. But you have to do the research yourself. Obviously, you have to select a company you want to buy, and then your investment return is going to be tied to the financial success or not of the company or companies that you buy. So it's a little tough. It's work for you, and you're taking risk because it's tough to diversify in the stock market unless you buy a lot of companies. But now, if you switch to mutual funds has that built-in diversification. So basically, a mutual fund is a group of investors, you and me, and everybody else that buys a mutual fund are pooling our money. And an expert who's a professional money manager takes that money and buys a whole pool of investments. The average mutual fund in Canada, for instance, holds over 100 different investments. So it has that built-in diversification that it would almost be impossible to get yourself if you were buying individual stocks. And a mutual fund as well can diversify across regions, across industry sectors. So, for instance, if you're buying the energy sector and that goes down, it's good to diversify in technology or precious metals or things like that. So mutual funds are a built-in diversification that's a lot easier than buying stocks.
Yes, and a lot of people buying stocks directly are glad September's over. So it's kind of nerve-wracking. So there's a built-in safety with mutual funds. Now, walk us through the different types of mutual funds and the risk and return of each.
Yeah, there's a lot of different mutual funds, and they really became popular in the last 2 or 3 decades. In fact, they're the most popular investment for North Americans by far. If you go back to the early 1990s, there's about $1 billion or so in mutual funds. Today, there's about $2 trillion in mutual funds just in Canada alone. But there's also about 4,000 different mutual funds in Canada, so it's very tricky to figure out which ones you want to buy. But those 4,000 can all be grouped into really 4 classes. The first is money market, which is basically treasury bills. It's going to be very low risk, but also very low return. The next group is fixed income money market funds, which are more corporate bonds, government bonds, mortgages, some of the fixed return on it. Again, going to be very low risk, but again, very low return, a little higher than money market. And then the most popular mutual funds are equity funds. And that's really where you're buying companies across the country and across different segments and across really the world. And so you're going to get a lot higher risk of knowing what the return is going to be in any one year, but you're also going to get the maximized return of the other funds. And then you have the last group is a balanced fund, and that's just exactly what it sounds like. It's a balance of money market and fixed income with equity. So you could have a 50-50 balance, 50% in equities, 50 in lower risk, or you could have a 60-40 either way. So they're very popular as well.
Right. And now with all these choices, what do we look at when we're purchasing one? And what about the cost? How transparent is it?
Regulations have changed over the last number of years, so it is very transparent now. Yeah, you do have to do a little bit of work yourself, or if you have an advisor, the advisor can help you out and do that work also. Most people, or a lot of people, will use an online brokerage, discount brokerage, so you can do some research yourself, or a robo-advisor. It provides that information and research for you. Every mutual fund has to have what they call a prospectus, and that prospectus really has everything. So in terms of fees, the management fees associated with that mutual fund will be included in the prospectus. The returns, you should really look at the returns. So don't just look at something that's hot right now and had a really good return this year. Look at what it did last year, the last 3 years, the last 5 years, because a mutual fund, most people will be in it for the longer term, saving for retirement, things like that. So you want to make sure that it's in there for the long haul. Also, there's a company called Morningstar that rates mutual funds. So they have a rating from 1 to 5, 1 star to 5 stars, and it's really based on past performance. So you can take a look, and a 5-star fund has been really good over the test of time.
Okay, thanks, Dave. And we'll link up lots more information at First Ontario. We'll link up your website and socials. And now, if you have a financial question or topic that you'd like Dave to cover, you can email your questions to financefriday@firstontario.com or get in touch through Twitter at finance_Friday. If your question or topic is covered on the air, you can win a gift card from a local business in your community.